All right, class, I'm going to apologize right now. I am out of town in DC. I brought my tablet with me. I brought my pen for my tablet, and I brought the wrong cord to plug it in. So I'm going to have to see if somebody has a micro USB cord, but it's after 10 now, so I really can't ask them. So I'm going to talk through this. So we're going to do the journal entries that the last video went over, how to do the perpetual inventory method journal entries. So the first entry, we purchased $6,400 worth of merchandise from Lion Company with credit terms 215 net 60. All right, so I would take a piece of paper and I'd make a note that I purchased this on April 2nd and it's $6,400. In fact, I'm going to do that. I'm going to, on my piece of paper, I'm saying, okay, so I know that I have purchased inventory and I'm going to pay $6,400 for it. So I'm going to increase my merchandise inventory account and I'm going to increase accounts payable. And this is to Lion. So on my sheet of paper, I'm writing accounts payable Lion, and I'm doing a T account and I'm saying, okay, so right now I have a $6,400 credit, and you'll see why as we proceed through these. All right, so that's the first entry. Now we paid $350 cash for shipping charges on the April 2nd purchase. So what do we do with shipping? Remember, what did I say? Shipping gets included as inventory. Shipping in of the inventory gets included as inventory. It's part of our merchandise inventory costs. So I'm going to increase merchandise inventory, and I paid cash for it, so I'll decrease cash, $350. All right, are we good here? So now on our balance sheet, I have merchandise inventory of $6,400 plus another $350. We returned to Lion Company unacceptable merchandise that had an invoice price of $600. So of that $6,400, we returned $600 worth. And this is why I need that T account. So when I return it, I'm not going to pay them. So I'm going to debit the accounts payable for Lion by $600. And that's why I need my T account, because if I pay with a discount, I have to know how much I owe them in total. And I'm going to reduce inventory because I'm returning it. So I reduced inventory because I'm returning it, and I reduced the account payable to Lion because since I'm returning the merchandise, I don't have to pay for it. So that's what that looks like. Now we sent a check to Lion for the April 2nd purchase net of the discount. Okay, so that's why I need my T account. So I started out with $6,400. I returned $600, so I owe them $5,800. I owe them $5,800. So now the question is, what was the discount? The discount was 2% if paid within 15 days. So I need my oh wait, I'll use the calculator on the computer. My phone's almost dead. Okay, so we owe Lion $5,800, but we're going to take a 2% discount. So here's the way I do it. I say, what happened to my calculator? Okay, I say, how much am I going to send them? So I owe them $5,800. I get a 2% discount, so I'm only going to pay 98% of that. So times 0.98. All right, I'm going to write them a check for $5,684. Now, if I owe $5,800, what is my discount? $1,160. 60. Wait, that's not right. 2%, oh, 5,800 times 0.02. There we go. 116 is my discount. Okay, so I'm going to write them a check for $5,684. So I know that I'm going to reduce my accounts payable. Now you have to think, how much did I owe them? I owed them $5,800, but I'm going to send them a check for $5,684. But I owe them $5,800. So since I owe them $5,800, when I'm done mailing this check, how much do I owe them? I don't owe them anything because I get a discount. So I have to reduce the accounts payable for the entire amount of $5,800. But I'm only going to pay $5,684. So what am I going to do with the $116 discount? I'm going to reduce inventory. I'm going to reduce inventory by that $116 for the discount. Now we purchased $12,100 of merchandise from Frist Corp. Okay, I'm doing it again. I'm taking a sheet of paper and I'm saying accounts payable, Frist, and I have a credit of 12100, 12,100, and I get a 1% discount if I pay early. So all I've done here is purchase inventory. So I'm going to increase merchandise inventory by 12,100 and increase accounts payable, Frist, by 12,100. So I've increased my inventory. After negotiations, we received from Frist a $600 allowance. So we called them and we said, there's a problem with some of the inventory, but we'll go ahead and keep it. Will you give us a discount? And they said, I'll give you a $600 discount. So the first thing I'm going to say is, okay, if they're giving us a discount, I'm going to debit my accounts payable account $600 because I'm not going to pay them that amount, the discount. So I'm going to take my accounts payable and take off $600. And I'm doing that on my T account too. Now, what do I do with the discount? I reduce the value of my merchandise inventory. So I'm reducing my inventory and I'm reducing my payable. Last but not least, we sent a check net of the allowance for the discount. So we started out owing them, come on calculator. We started out owing them $12,100, but we got a $600 credit. So now we owe them $11,500. So when we're done paying, that's gone. We get a 1% discount. So we get a discount of $115. Or the other way of looking at it, 11,500 times 99%, our check is going to be for 11,385. So I am going to pay them. So my account payable for Frist is gone. I owed them $11,500. Now I owe them nothing, so I have to deduct the entire amount. I'm going to mail them a check for 99% of what I owe, which is $11,385. So I have the discount of $115. I'm going to take that out of inventory. All right, how did that go? This one worked relatively the same. We have sales returns and allowances. I'll let you work on that. And I will come back and we will look at this tomorrow. Okay, good start.